Let's discuss risk management simply because a lot of people claim that they know about risk management, they use risk management, but they really don't. And this is one of the most important concepts to really grasp with trading because our capital as traders is what keeps us in the game and gives us longevity to survive, right? Through the whole learning curve and the whole process of becoming a professional trader. So now, what a lot of people do is they jump in the market and they just buy and they just hope for the best. If they make profit, they take their money. If they lose, they just sell out at random spots, right? They don't have key points. So let's jump right into it, how to calculate your position size and where you should be placing a stop loss and how you can calculate a profit target for each position to always ensure that you have a set risk reward and you're not gambling. Because if you go in and you don't have a stop loss set and you don't have a projected target profit set, you're not trading, you're gambling. Whether you choose to believe that or not, you are gambling. So when you are trying to calculate your position size, this is the part of the system that tells you how many shares that you're going to buy or sell per trade, right? So now the position sizing helps you to determine how many shares you're going to go long or short with for a particular trade. It's going to help you define your risk per trade and your overall risk to your portfolio and your expected returns to your portfolio if everything goes right. So the way it breaks down is strategy is about only 10% of it, position sizing is 30%, and the rest is all psychology, right? It all comes down to the way we manage our emotions because a lot of people tend to think that they're managing their trade, but they're actually managing their emotions, right? And that's something very, very bad to do in trading. The first thing we should be doing before entering a position is defining a risk. What is our risk for the trade, right? Not, oh, how much profit can I make? Oh, this is going to skyrocket. I'm just going to buy here. That's not how we do it. You look at the trade. If it presents a setup, now you need to, okay, what is my risk on the trade? So you need to understand what is your maximum loss in the trade. So if you have a $10,000 account, right, let's say you're only risking 1% of your capital. This means that you cannot lose more than $100 per trade if you have a $10,000 account because you're risking 1%, right? So let's go to the next slide. So now how do you determine your position size for each investment if you now know that you're only risking 1%? So how many shares do you buy, right? So the formula is you take the percent risk per trade, which is 1%, times your capital, right? And then that's going to give you that $100 risk, right? So now we take that $100 and we divide it by our risk per share. So now let's take a look at this. Let's say our entry price is going to be $8.60. Our stop loss is going to be $7.90 and our profit target is $10. Now why is that? Let's jump here. The reason being is because we always have to have the risk reward in our favor. So if we're trading with a 2-to-1 risk reward, that means we're either going to make 2 or lose 1, right? So in this case, since our max loss is 1%, we take that 1% times $10,000, which is our capital on the account, which gives us $100 risk per trade. Now we take that risk per share, which is 70 cents in this case, and we divide it by that 1% risk, which is $100. That gives us 143 shares. So now if we lose, say 70 cents on 143 shares, we only lose $100. Do you see how the math worked? Because if you're just jumping in a trade and you're just like, you know what, I'm going to buy here and just hope for the best, you're going to have an imbalance of wins and losses. Yeah, you could win a lot of the times, but if you're making 200 here, 300 here, losing 400 here, losing 500 here, making 200, losing 100, it's not, the numbers don't add up, right? So let's take another look here. If we were, let's say, shorting a position, right? Let's say where we're going to short is, let's say, $16.50. But we know that our risk per share is going to be $2.10, right? So now if we're risking $2.10, we need to at least make double that, right? Because we have a 2-to-1 risk reward. So that means we need to make at least $4.20. So now when you're going into a trade, you need to make sure that there's no resistance or support that's going to stop you from earning that potential profit on the trade, right? So these are stuff that you have to be aware about that I'm going to be making another video about to better explain and give you guys a visual representation. This is just to break down how you would position into a trade with the mathematical formula on how many shares to buy, because a lot of people tend to just jump in and just gamble. So same exact concept. You take that 1% risk, times it by that $10,000 of the net capital that you have. That gives you the $100 risk. Now, you have that $2.10 per share risk. You're going to divide that by the $100. That means you can short 48 shares. So now if you lose $2.10 on 48 shares, that is a $100 loss on the trade. You see what I'm saying there? So you always need to calculate how much you're going to potentially make and potentially lose. So even if you win, let's say 50% of the time, you could still be extremely profitable. Let's take a look at this. Let's say trade 1, you lose 100, then you make 200, 100 loss, 100 loss, 200, 200, 200, lose 100, make 200, lose 100, right? We won 50% of the time, but look at this. Our total wins are 1,000, our total losses are 500. We have a net return of $500 even though we won only 5 times out of 10. See what I'm saying? So we don't have to be right all the time. We just have to have a consistent risk reward. And a lot of people don't understand this. See, a lot of people can, let's say, have a 90% win rate, but not be profitable. Why? Because there's an imbalance of risk reward, which is very, very crucial. So I'm going to end the video here. I'm going to make another video with a visual representation of how you would actually place these trades using risk management on a platform that you use. So I hope you guys instill risk management. It's very, very important. If you don't, it's going to reflect on your trading performance, and you may possibly take a very large loss that you did not intend to take, and that is when you will make the necessary change to do so. Hope you guys have a blessed trading week. Take care and have a blessed day.